Last month we have seen market moving up, and in fact, if you look at more than last month, if you include a couple of last week, we have seen market moving up by 1,000 odd points and almost close to I would say all-time highs numbers, primarily driven by a couple of things actually, because if you look at in isolation, nothing much has happened. However, collectively, small things put together has led to a bigger change. To list some of them, if you look at the festive numbers, were not as great as previous averages or something like that, if you call off. But yes, certainly they were better than the last few months and maybe quarter, and which is a positive change. The auto sector, which is struggling for last 1 year now, has seen decent sale, resulting into a decent amount of inventory coming down, and which obviously eases off the pressure on the entire dealer network and build a case for inventory build-up and resulting in higher sales. The other retail numbers also have been better. We have seen the global tensions getting eased off a bit more than what we had seen in last few months. We have seen the central banks being more accommodative, more concerned about the growth. We have seen government taking bold steps like cutting tax rates for the corporate. More than that, I think what market liked about is that the government is getting concerned about the capital market as well, and they think that there is a need to do things to support that as well. So if you look at, these are small things which cumulatively had led to a larger build-up, and that's what has resulted in a market moving up. So that's what I think is the broader thing in terms of what happened. Now, obviously, going forward, if we look at and say, okay, is it sustainable, non-sustainable? We are close to all-time high. Nothing much has happened, and things like that. I think the way we look at it, I think that, as I just mentioned, these small steps are building it. So yes, the volume numbers for the corporate may not be large, but if you look at, most of them are able to demonstrate a higher profits because of the tax related thing, and that will lead to an case for further investment into the business, and which will help in getting the positive margin trajectory going forward. Not that the margins have fallen through the cliff, but yes, there is a case which is getting built up. The festive season has been good. Now with good rains, I think the agricultural growth is expected to be better. Central bank is expected to continue its accommodative mode and expected to cut rate further next month. We have seen global central banks cutting rate and being accommodative about things. If you add these small things, then the steam is still left. It is not that we are running out of steam in the market. May take a long pause, Thirdly, and which is very, very important, is that yes, if the headline number, if you look at the, say for example, Nifty would have delivered say 15%, 16% return in last 1 year. But if you move down to say the small cap, more than the mid cap has delivered around 6%. Small cap would have delivered around 1% or thereabout. So there is where there is a lot of value. The valuations are quite attractive. That does not mean that all is lost in large cap. I'm not making that statement, but between the two, if I look at relative basis, small cap and mid cap looks more attractive. And if you look at, we started getting correction in the market, especially in the mid and the small cap, starting January of 18, right? We are roughly closing 2 years of downward trend. Historically, we have seen, these trend lasting anything from 6 months to roughly 2.5, 3 years. So once we pass 2 years, if you look at technically also, we are moving in that phase where the things start getting reset. People start becoming positive about the future. And some of it is also statistics that, if you look at auto sales number was lower, started becoming lower from last December. So once we move in January, then you're comparing yourself with a lower base, and on a lower base things start looking better. Some of it is structural, where we are seeing things like tax cut and other policy actions being in place. And some of it is also behavioral, where with few things adding up, people start becoming slightly more optimistic. So the point I'm trying to make is that certainly the worst of the market and the worst of pessimism is behind us, right? It does not mean that we have a run-up rally tomorrow, but yes, anything between now and next 1 year, I think we will have a strong build-up. If it gets supported by the global growth and the policy support, I think certainly we will see more strength coming to the market. Also, there has been a lot of discussions about FIIs not being buying and things like that, and which has led to market correction in past few months. So ultimately, if you look at this month, the flow has been positive. And why so? Because, ultimately India is one of the few large economies where the growth is still healthy. 5% may not be good for us, but if I compare it with a lot of global economies, it's still a good number. That does not mean that we should be satisfied with 5% and everything is okay. Certainly India needs to grow at 7-8%. But with confidence coming back in the government, with things happening, I think the foreign flows will also start coming in. So we will see the support coming from the flow side as well. So all of this put together is what we are looking at, that next 1 year for the markets overall, including the small cap and mid cap, should be a good year, and that's how I think we look at it at this junction.
Mutual fund investments are subject to market risk. Read all scheme related documents carefully.